Welcome back to Emperor of Estates, where we build your CAM knowledge, lesson by lesson. Today's episode is critical for future leaders of associations. Officer and Director Insurance, what every CAM must know. A liability insurance coverage for officers and directors. The heart of any community association is its board. These officers and directors make financial decisions, enforce rules, and manage property. But did you know they can be personally sued for honest mistakes? That's where D&O insurance comes in. Directors and officers, D&O insurance protects board members, officers, and even committee volunteers from personal liability when they act on behalf of the association. This insurance covers wrongful acts committed while performing association duties, applies to both current and former board members. Ideally also includes the community association manager. Coverage is typically $1,000 or more. Fiduciary duty alert: board members have a legal obligation to act in good faith, exercise due diligence, work in the best interests of the association. Ignorance is not a defense. Officers must avoid using their role for personal gain. 2 types of D&O policy: claims made. Covers claims filed while the policy is active. Occurrence covers incidents that happen during coverage, even if the claim comes later. B. What D&O insurance does not cover. D&O insurance has strict boundaries. It does not cover fraud, willful ignorance of the law, acts outside of official responsibilities, incidents before the policy was active. Fidelity bonds. Separate from D&O insurance, fidelity bonding protects against theft of association funds. Must cover anyone who controls or disperses funds. Officers, president, secretary, treasurer. The maximum amount ever held by the association. The association pays for this protection. It is not optional for condominiums. C. Workers' compensation insurance. Workers' compensation is required by Florida law if the association has 4 or more employees. It provides medical coverage, disability benefits, wage replacement for job-related injuries. Who is considered an employee? Full-time staff, students, part-timers, and even family members. Corporate officers receiving payment. Owners and partners may elect coverage by notifying the Division of Workers' Compensation. Associations should also consider volunteer endorsements to cover members donating labor. Casual labor and contractors. Casual employees, under 10 days and $100 total cost, usually don't require coverage. General contractors are liable for subcontractor coverage. If not, the association may be on the hook. Non-compliance penalties: $100 per day. Fine. Manager $1,000. Forced business shutdown. Employee lawsuits. Double compensation for minors injured under illegal conditions. Injury reporting. Must report within 7 days. Failure can result in civil penalties up to $100 per failure. D. Compensation rates and exceptions. Workers' comp is calculated using a hazard rate based on job risk, multiplied by the employee's annual salary. Employees cannot be charged for the premium. Covered injuries include accidents, infections from injury, occupational diseases, death, with limitations. No compensation if caused by intoxication or intentional harm. Safety rules were ignored. 25% reduction in benefits. Special disability fund. If a handicapped worker is injured, compensation is paid from a special state fund. Employer must have known of the disability beforehand. Medical costs include everything: medicines, devices, prosthetics, etc. If the employer fails to provide care, the employee may get treatment at the employer's expense, with approval. Payment timeline. Compensation starts after 7 days of disability. If disabled more than 14 days, pay from day 1. First payment due on day 14 after employer is informed. Late payments equal a 10% penalty unless contested or delay is excused. Lesson 6 of 6, Module 4 Wrap-Up. Let's lock in the key terms from this entire module on insurance and risk management. Key terms and concepts. Association, fire and casualty insurance, covers common property, not personal items inside units. D&O insurance shields officers and directors from personal liability. Employment practices, liability coverage, protects against employee claims of wrongful termination or harassment. Liability insurance guards the association from lawsuits over negligence. Property insurance, hazard or named risk, covers damage to common elements from disasters or third-party actions. Umbrella policy provides extra liability coverage above other policies, often in $1 increments. Windstorm insurance, often purchased via Citizens Property Insurance Corp. (CPIC) for hail windstorm damage. Workers' compensation, medical and wage coverage for employees injured on the job. CAM exam tip: know which policies are required, optional, or specific to types of communities, like HOAs versus condos. Final motivation: you're not just preparing for an exam. You're preparing to safeguard communities, defend good people, and lead with integrity. Mastering insurance isn't just about coverage. It's about courage to make the right decisions when it matters most. Call to action: don't forget to like, share, and subscribe to Emperor of Estates for your complete CAM education. Drop your questions in the comments, and let's get ready for the next module together. CAM training, #CAM insurance, directors and officers, #workers comp, #Florida CAM, #Emperor of Estates. And as always, explore our empire of channels: Emperor University, Emperor Artificial Intelligence, AI, Emperor Science and Fiction, Sci-Fi, Emperor Nature, Emperor Aviation, Emperor Entertainment, and Emperor Music. Links are in the description below.